What is RMLO in real estate? A lot of people want to know the answer to that question. We're going to explain it right now. In today's section, we're going to explain what an RMLO is, why it's important, what they should do for you, and how much you should expect to pay for an RMLO. Now, as always, I have to explain during certain segments where we're talking about legal advice or financial advice that I am not a licensed real estate attorney, nor am I a licensed financial advisor. These are my own opinions, and these are the things that I do and believe to be true and the path that I follow, for better or for worse. But you need to always seek professional, legal, and financial advice whenever necessary. RMLO stands for Residential Mortgage Loan Originator, and it's a license that you have to pass to be able to broker mortgages or to create mortgages. In short, an RMLO has a license to underwrite mortgage loans and seller finance loans. Now, I want to be clear. There's a lot of people that have RMLO licenses, but most of them are set up to deal with FHA loans and Fannie Mae loans and VA loans and regular traditional loans. It's my understanding that the RMLO that you need as a seller financier only does work for seller financiers and is not doing work in the traditional arena. At least that's the way it is in Texas. You may have to check with your own state property code or with your legal attorney. But if you think you're just going to go through the yellow pages and find yourself someone with an RMLO, well, you are. But they're going to be doing regular loans and not have a clue as to what you're talking about when you're trying to explain to them that you want to seller finance a house you own to your buyer and you want them to work with you. They're not going to understand that. So you're looking for a third-party vendor that actually is in business to help people like you and I. Now, when Dodd-Frank came out, this legislation that was proposed a few years back, they stated that you had to have a RMLO license, or a Residential Mortgage Loan Originator's license, if you were going to do more than 3 seller financing transactions in a 12-month rolling window. Now, 3 is the de minimis set by the federal government in the Dodd-Frank Act. But like Texas, you're allowed to do 5. How does state override federal? Well, I talked to the commissioner of the regulatory body that oversees owner financing, seller financing in the state of Texas, and she said that the reason Texas was 5 was because the Dodd-Frank Act says that if the state does not address the de minimis, then the de minimis shall be 3. Well, Texas did address the de minimis, and they said the minimum should be 5. So that's why some states can have more when the federal suggestion is only 3. Now, just because you're only going to do 3 or less in a 12-month rolling window doesn't mean that you don't have to conform to what an RMLO has to do. You still have to do the same paperwork, the same disclaimers, the same cooling off periods, all the same everything. You just don't have to have a license to do it. So, since you don't have a license, you probably don't know how to do it correctly in the first place. So why don't we just go ahead and hire someone, whether we're doing 1 or we're doing 100. Let's just make sure we get an RMLO. That's my opinion on the whole thing. If you're going to do it, then let's get an RMLO to keep us in compliance with all the regulatory parameters, okay? Want to learn more about creative real estate? Go ahead and subscribe to this channel. Hit that like button. And if you want to do me a personal favor, hit that share button too. I certainly would appreciate it. So what is an RMLO responsible for? Well, number 1, they're responsible for keeping you compliant with all the state and federal regulations. That's a big, big help right there. Some of those regulations include, does your buyer have the means to make the payment? Is your loan within the guidelines of the requirements? For example, are you charging too much interest? Is your interest rate against the law? Is it usurious? There are limits on interest rates in different states. Have you, in a timely fashion, disseminated the disclaimers, and have you given them in a timely fashion the right amount of cooling off periods so they can sit with documents and have time to even go to a lawyer to have them reviewed? You have to give cooling off periods at certain points during the negotiation. Now these regulations go on and on and on, but those are the main ones. But if you hire an RMLO, you can relieve yourself of having to know all this. This is what I did when I found out that my business was getting regulated. I started to quit like everybody else. Then I decided this business was worth too much money to me to just up and quit. So I decided to get nose to nose with the Dodd-Frank and that 2,500 pages of regulation and figure out what they were asking of me. Come to find out, they were requiring that I hired an RMLO. Now, the state of Texas granted that we didn't have to be an RMLO and we didn't have to have an employee that was an RMLO that only worked for us. They said, for a limited amount of time, we're going to give you some grace, and you can hire a third-party RMLO that's been trained to deal with just investors like you. And so that's what I've been doing, is taking advantage of that offer from the state of Texas, was just to be able to hire a third-party RMLO. So when I decided that's what I was going to do, it got real simple. I called the RMLO in, we sat down, he told me how it worked, what we needed to do, and then we started doing it and moving forward. So I didn't even have to be an expert at what an RMLO does. I just needed to understand what I needed to provide him so that he could bless my owner finance transactions, put me in the compliant column, and call it a day. So what does an RMLO cost? I'm sure it varies from state to state, from RMLO to RMLO. I can tell you this. I've seen RMLOs for as little as $450, and I've seen them for as much as $3,000 per transaction. I think $450 is way too low and wouldn't expect much from a person who's only charging that much, because it is a certain amount of work. On the other hand, I think $2,500 or $3,000 is too much. I routinely see my RMLO charge $1,250 per transaction, and that's in the state of Texas. I think that's a fair rate, because they do have a certain awesome amount of responsibility, and they are required to be audited once every 2 years. By the commission that oversees all of us. And it's just a lot. And so, I didn't like the fact that I had to move to this next level of regulation, but it happened. And I could either quit my business or I could learn to conform. Now, before they were regulating this business, I didn't have any closing costs for my buyers. But now, since I have costs, so do my buyers. Consumer protection always comes with a price, and usually it's the consumer that has to pay for it. Because entrepreneurs like us, we find ways to overcome it. It's kind of like if they move the working wage to $15 an hour. They won't be serving hamburgers at the same price when that happens. The entrepreneur is going to raise the price of the salad and the drink and the hamburger, because he's not taking the money out of his pocket. He's just got to add it onto his product. So same thing goes here. Entrepreneurs, we find a way to mitigate the problems that we have in a legal fashion and stay moving forward. For a free webinar on the art of creative real estate investing, just click on the link below and it'll be automatically downloaded to you. I hope these episodes are helping your real estate career, and thanks for watching.